Hello and welcome to the Look Ahead with me, Fiona Cincotta, Senior Market Analyst at City Index, looking ahead to Wednesday, the 12th of March. So we'll be watching primarily, really, again, the fallout from the reaction of Trump's latest announcements of increasing those trade tariffs on Canada. We've also got ECB President Christine Lagarde. She'll be speaking, as well as the Bank of Canada interest rate decision. Obviously, timing there is really interesting given the increase of trade tariffs from President Trump announced today. And then we've also got US inflation data, which is going to be really closely watched. So much to focus on tomorrow. But first of all, let's just kick off with Trump's latest announcements in response to retaliatory tariffs from Ontario on 25% on electricity imports to the US. Trump has now announced that that he will be applying 50% trade tariffs to aluminium and steel imports from Canada. So this is quite a big increase, 50% increase. It was at 25%, now at 50%. And interestingly, this comes, as I said, as the Bank of Canada will announce their interest rate decision tomorrow. Now, the interest rate decision comes amid signs that the Canadian economy is starting to steady out. Obviously, the Bank of Canada has been cutting interest rates fairly aggressively, particularly compared to some other central banks. The Bank of Canada is expected to cut again tomorrow by 25 basis points. That would take the rate from 3% to 2.75%. The moves that we're seeing from the Bank of Canada also is basically as they've sort of really struggled with the economy. They have seen inflation ease. Actually, inflation now, underlying inflation, has ticked up slightly, so to 2.1%, so just above the 2% target level. But given all the uncertainty, given the trade tariffs that were applied, then exempt, then delayed, and then reapplied, I think it's quite likely that the Bank of Canada will go ahead with this rate cut in order to offer some support to the Canadian economy, which could come under quite a lot of pressure given all the uncertainties with regards to its exports to its neighbor, the US, and largest trading partner. Now, as a result of these latest developments, we have seen the loonie weaken to a weekly low against the US dollar. This is the USD CAD chart that we're looking at the moment, which is interesting given the weakness that we're actually seeing in the US dollar anyway. US dollars trading at a multi-month low, around a 5-month low, just as we're seeing investors sell out of US stocks, selling out of the US dollar. We're seeing yields fall lower on treasuries, and basically amid concerns of that recession in the US, given the slowdown that we're seeing, or signs of a potential slowdown in forward-looking data. But sticking with the Bank of Canada just now, as I said, expected to be cutting rates. So potentially, if we see a Bank of Canada policymakers who are particularly concerned about the outlook and what this might mean, then potentially we could see the loonie weaken further. Obviously, as I said, keeping in mind that this is against a backdrop of a weaker US dollar, as we've seen investors sell out. So with that in mind, we may find that the upside in CAD USD CAD is limited. But just as far as levels are concerned, I mean, we did have a spike higher. This is today's candle on the announcement of those trade tariffs, but actually the price is now back below that 144.50 level, which seems to be pretty much acting as a ceiling on recent rallies going back to mid-December. On the downside, we've got the recovery from the around 143 level, actually just below the March low there was 142.39. But again, there seems to be a fairly familiar trading pattern, the holding pattern that the pair has been trading in. But if we do get a break above this level here, a close particularly above the 144.50 level, that could then open the door to 145 and on to 146 level that we saw here hit just at the end of January. On the downside, though, for whatever reason, if we hear that the Bank of Canada is adopting a slightly more aggressive, or should I say hawkish tone, then that could in fact find that we find some strength in the loonie, which could bring it back down to that 143 level. But as I mentioned, we've also got US inflation data, so that's going to impact the US dollar and what we see there. Expectations, I'm bringing up the S&P 500 now. The expectations are for US inflation just to cool ever slightly to 2.9%, down from 3% year on year. Underlying inflation as well is expected to come in at 3.2%. Now, this is going to be really closely watched for a couple of reasons, because obviously we've had this massive sell-off in the US stock market and a sell-off in the US dollar amid those concerns over the outlook for the US economy, fears of a recession, owing to the impact of Trump's trade tariffs, the uncertainty of the impact of what they could have on the US economy. As I said, forward-looking data is showing signs of deteriorating confidence, which means, corporates and households are likely to rein in spending, which can hurt economic growth. Now, the problem being is that trade tariffs also are expected to be inflationary. So that could mean that if we see sticky inflation at a time when the US economy is expected to start cooling, stagnating, or even contracting, creates this stagflationary trend, which makes it very difficult for the Federal Reserve to then cut interest rates to support the economy. So inflation data tomorrow, if we see, although, we're not going to be really seeing impact from trade tariffs coming in yet, but if we do see signs that the US inflation remains sticky, that's going to unnerve the market, and that potentially could send stocks even lower, knowing that the Fed, which is expected to cut interest rates around 3 times this year, if there's any sense that they're not going to be able to cut those interest rates because of sticky inflation, then that is going to send stocks lower. We can see here, this is the S&P 500. It's just testing support around the 55.50 level. It's fallen really sharply from that 61.39 all-time high that we saw just in the end of February. So, not even that long ago, just in the space of a few short weeks, we've seen sort of almost a 10% decline in the index. Is testing that level there. Obviously, we've got the RSI, which is very much in oversold territory. So we could find that this level offers some support because of those oversold conditions. I think sellers should be wary chasing further losses, further downside at these levels. Potentially, we could see a period of consolidation or even a move higher to bring that RSI out of oversold territory. But as far as levels to be watching, if we do get a break below that 55.50, next down on the 5500, and then we've got this one here, which is 5400. On the upside, buyers really need to get above 5700. That was the level that we saw at the beginning of November, and also the 200 SMA. Which is a key level there of 57.55. We can get above that, we may see buyers gaining a bit of momentum. We'll see a more of a neutral position as far as the S&P 500 is concerned, negating that near-term sell-off. So that's just going to take a quick look at euro US dollar. As I said, we've got Lagarde, who is speaking tomorrow. Really interesting, because the dollar is euro is really capitalizing on that US dollar weakness. We're seeing very different moves as far as sort of currencies and the currency markets are concerned. The sell-off in the US dollar, buying into the euro, and the rally in the euro actually kicked off last week, when we had the news from Germany of the announcement of the fiscal reform, which really changes the way that sort of the fiscal position of Germany. They were planning to borrow more in order to spend heavily on defense and infrastructure. Now, that does mean that has gone down well with the markets. We've seen a real increase in demand for European stocks last week. DAX also hit record highs. They're obviously down this week on the concerns over the US, but we're also seeing this strength in the euro, which, I mean, it had, as we said, the strongest week last week. In 16 years, it was up 4.4%, something along, really strong gains. We're getting up to this 109.40 level, a level that was last seen back in November. But this is also, I think, a change. We're seeing that unwinding of the US exceptionalism trade, selling out of the US dollar, moving into the euro amid expectations that Europe is going to be upping their spending, potentially boosting their growth, which has been pretty stagnant in recent years and certainly quarters. So as far as levels are concerned, if we do hear a more hawkish sounding Christine Lagarde, who may sort of suggest that the central bank could be nearing the end of their rate cutting cycle, given that they have cut rates so frequently and that the euro seems to be recovering. There are signs of recovery in the eurozone economy as well. Investor sentiment is improving. So 109.40, that's the level to be watching on the upside. Above there, we get to 110. I mean, there is a potential for this trade to run quite a lot higher. If we do see the ongoing recovery, we've got 112 up there as well on the upside. As far as support is concerned, immediate support down at 108, but the 200 SMA there at 107.30, that's a level to watch. But again, that we've had some very strong bullish engulfing candles. Do watch for the overbought territory here. So we could also see a period of consolidation before we see further gains. Just be wary of chasing that higher. So I hope you've liked everything that you have seen today. And if you have, then please do give this video a like. And if you would like to see more videos like this, then please do go to the YouTube page.